Welcome back, fellow value investors. In this video, I'm going to be covering a neat company that does financial services down in Brazil by the name of StoneCo. This is a high growth company. They're also profitable and generate free cash flow. So a lot of really desirable aspects to this investment. I've been an investor in StoneCo for some time, and this stock has really risen a lot over the last 30 days, and the stock is enjoying a very good 2023. The company announced their earnings less than 2 weeks ago, so I have a fresh set of financials to take a look at and put those new numbers into my analysis to make a decision whether I should buy more shares of StoneCo, just hold my shares, or sell my shares. I'll share my process and my conclusion with you. Before I jump into the analysis, do me a favor and like my video, subscribe to my channel, and please leave a comment on StoneCo. StoneCo is very much like a PayPal, where they're helping consumers pay for things using digital payments, whether it be their credit card or another vehicle to buy their goods or services. It's a model that worked here in the United States and is working for StoneCo down in Brazil. It's no secret that we continue to move a lot of our purchasing to a digital format online on our phones, and that's just going to continue to happen. Here in the US, we're pretty much mature in buying things, off Amazon or whatever website you like to buy, ordering food and having it delivered. As we look at other markets around the world, they are somewhat catching up with where the US is. And I think it's a big opportunity for StoneCo to catch a lot of the market share of digital payments down in Brazil. It's a big country, big economy. So it's good to be an investor in StoneCo to get that diversification into Brazil's economy in a quality company that's been growing. I like the company, I like the industry, and I like the management team. Management team is really focused on growing the company and making the company more valuable. StoneCo announced their earnings for the third quarter of 2023, and the results were really positive, and it really sent the stock price up. It's up considerably over the last 30 days. Let's start with revenue. Revenue grew 25% if you compare year over year. If you compare the third quarter of 22 to the third quarter of 23. If you look at profitability, profitability is very good. It's actually growing quite a bit. You look at net income has grown tremendously, 4 times the rate that it was a year ago. So needless to say, this is a really positive earnings release, and it sends the stock just flying up. The long-term story on StoneCo is real positive as well. The company just 5 years ago was a $400 million company. And the last full year, 22, they were a $1.8 billion company. That's just exceptional growth in the company. And I think a lot of investors have taken notice that StoneCo is a high growth company with profits and free cash flows. StoneCo has a quality balance sheet because they have a lot of cash. And this is in Brazilian currency. So I have to convert it by multiplying it times 0.2 to get it from the Brazilian currency to the US dollar. But I think the numbers, you could see that they have more cash than they do the combination of debt. So they have net zero debt if you look at the company, which is a sign of a quality company. They also generate free cash, so they continue to take their cash position and make it larger. I believe that StoneCo is currently discounted by 26%. And I get to that valuation by looking at their free cash flows and looking at their earnings per share. Let's take a look at free cash flows first. So I'm going to take their current free cash flow run rate and annualize it to get to $393 million. And I've converted their financials into US dollars. And I'm going to take those free cash flows and grow them quite dramatically at 20% because the company is growing really fast. I'm not expecting the growth to stay at 20%. I'm going to use a 5% growth rate to get my terminal value, which is $8.9 billion for all cash flows beyond year 5. I'm going to use a high weighted average cost of capital to discount those free cash flows. And I use a high 13% because it is an international company. It is smaller, so there's higher risk. When I discount all those free cash flows by 13%, I get to a net present value of $6.3 billion for the company. I'll add the cash on the balance sheet, but take away the debt on the balance sheet to get to an equity value of $6.6 billion is the value of the cash flows plus cash minus debt for StoneCo. The market cap is 3.3 billion, and therefore my value per share is $20.30. The market will sell you shares at $16.40. So it leaves about a 24% discount if we look at free cash flows. Earnings per share, I expect they're going to do $1.12 per share in the next 4 quarters. I'm going to give them a conservative PE of 24. I just showed the growth numbers, and if somebody put a 48 on this company, it would not be out of the realm of possibilities. But I'm going to go with a conservative 24. Expect them to grow at 5% to discount all the free cash flows that I expect from the company and get to a earnings per share value per share of $21.37. Stock market will sell you shares at $16.40. So if we look at the earnings per share value method, we get a 30% discount. I'll combine the two, putting more weight on free cash flows, and I get to a 26% blended discount on StoneCo. Looking at where the stock price has been over the last 12 months, you could see that the stock price offered value investors certain points where you could really buy the stock at a good price and then be rewarded with quick appreciation. If you look at just the last month, it is up tremendously. It's actually up 65% in the last month. So go StoneCo. Over the year to date, it's up 73%, which is phenomenal. And I think more investors are becoming aware of StoneCo. It still has a discount available on the stock, which is good. I have a value of the stock at $20.30. It's currently being sold at $16.40. So should I buy, hold, or sell StoneCo? Let's start with the company. I think the business is really good. I like digital payment systems. The companies tend to be profitable. Not a lot of capital is involved. They generate free cash. So I definitely like what I'm seeing with the company. I like the industry, and I think their management team's doing an excellent job. So I like the company. I like the industry. They have negative debt. They have more cash than debt. So they are well below the 3x EBITDA. They have a strong balance sheet to continue to grow. They offer a discount, which is good, but I'm going to just be a holder. And the reason for it is that I showed you the graph, and there was a steep price increase over the last 30 days of 65%, which is great. Really fun to be an investor in a company where it just really takes off like that. But I tend to buy when the buying is good. This is a smaller company. This is a company. I'm in the US. The company operates in Brazil. So it's a foreign company to me. And therefore, it's a high risk. Therefore, it is at a good discount. If it were to drop, 10, 20%, the stock price, I'd be a buyer. But for now, I'm going to hold my shares. And if it keeps going up, that'll be great. I'll just continue to watch it and hold this really cool company. Thank you for watching the video. I hope you found it interesting. I'd love to hear what you think of StoneCo. Please leave a comment. Also, please like my video and subscribe to my channel. Thanks again for watching.